Assalamualaikum and hello everyone. My name is Nur Faireza binti Akil and this is DPF5053 Financial Market. What are the financial markets? It can be confusing because they go by many terms. They include trade markets, Wall Street, Bursa Malaysia, and even simply the markets. Whatever you call them, financial markets are where traders buy and sell assets. These include stocks, bonds, derivatives, foreign exchange, and commodities. The markets are where businesses go to raise cash to grow. It's where companies reduce risk and investors make money. And so today everyone, we will overview the financial market in Malaysia. Therefore, at the end of this video, you will be able to answer these following questions. What is the financial market? What are the functions of financial markets? And what are the types of financial market? Now everyone, let's begin. Before we proceed to the type of the financial market, now I'm providing you the functions of the financial market. The first one, it facilitates mobilization of savings and put it into the most productive use. Second, it helps in determining the price of the securities. The frequent interaction between investors helps in fixing the price of securities on the basis of their demand and supply in the market. The third function of financial market is it provides liquidity to tradable assets by facilitating the exchange, as the investors can readily sell their securities and convert assets into cash. And lastly, the fourth function of financial market, it saves time, money and efforts of the parties, as they don't have to waste resources to find probable buyers or sellers of the securities. Further, it reduces costs by providing valuable information regarding the securities traded in the financial market. The financial market may or may not have a physical location. For example, the exchange of the asset between the parties can also take place over the internet or phone also. There are so many financial markets. Every country is home to at least one, though they vary in size. Some are small, while some others are internationally traded trillions of ringgit or dollars on a daily basis. And folks, here are some types of financial market. The first type of financial market is money market. What is money market? The money market is a trade in a short-term debt investment. At the wholesale level, it involves large volume trades between institutions and traders. At the retail level, it includes money market mutual fund bought by individual investors and money market accounts opened by the bank customers. In any case, the money market is characterized by the high degree of safety and relatively low return in interest. An individual may invest in the money market by buying money market funds, short-term certificate of deposit, municipal notes, or treasury bills, among others examples. Traders and institutions are more commonly the buyers for other money market products such as ringgit deposit, bankers' acceptance, commercial paper, federal fund, and repurchase agreements. Second type of financial market is a capital market. Capital markets are venues where savings and investments are channeled between the supplier who have capital and those who are in need of capital. The entities who have capital include retail and the institutional investor, while those who seek capital are businesses, governments, and people. Capital markets are composed of primary and secondary markets. The most common capital markets are the stock market and the bond market. Capital markets seek to improve transactional efficiencies. Their markets bring those who hold capital and those seeking capital together and provide a place where entities can exchange securities. The third one is derivative market. What is derivative? A derivative is a financial security with a value that is reliant upon or derived from an underlying asset or group of assets, a benchmark. The derivative itself is a contract between two or more parties, and the derivative derives its price from fluctuation in the underlying assets. The most common underlying assets for derivative are stocks, bonds, commodities, currencies, interest rates, and market indexes. These assets are commonly purchased through brokerage. Derivative can be traded over the counter or OTC or an exchange. OTC derivatives constitute a greater proportion of the derivative market. OTC traded derivatives generally have a greater possibility of counterparty risk. Counterparty risk is the danger that one of the parties involved in a transaction might default. These parties trade between two private parties and are unregulated. Conversely, derivatives that are exchange traded are standardized and more heavily regulated. And the last one is foreign exchange market. What is foreign exchange market? The foreign exchange market is an over-the-counter marketplace that determines the exchange rate of global currencies. Participants are able to buy, sell, exchange, and speculate on currencies. Foreign exchange markets are made up of banks, forex dealers, commercial companies, central banks, investment managed firms, hedge fund, retail forex dealer, and investors. The foreign exchange market, also called forex, FX, or currency market, was one of the original financial markets formed to bring structure to the burgeoning global economy. In terms of trading volume, it is, by far, the largest financial market in the world. Aside from providing a venue for buying, selling, exchanging, and speculation of currency, the forex market also enables currency conversion for international trade settlements and investments. Okay everyone, so that's it for today's video. I hope you will enjoy watching the video and have a very good picture of financial market in Malaysia. My name is Nur Faireza binti Akil, Politeknik Metro Betong, Sarawak. Good day and Assalamualaikum.